Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Happy Wednesday. What day is it? It's hump day. That's right. Pre-market prep here. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. We are going to talk about retail earnings. We are in the season. We have Lowe's following, in a sense, Home Depot from yesterday. We have Target this morning. We have TJX this morning. After the close today, we have L Brands, or what remains of the company formerly known as L Brands. We've also got NVIDIA. We've got Robinhood. We want to talk some biotech stocks that we think look okay. And we'll take questions from our chat. Gil Morales is our guest today. He is the author of the Gilmo Report. He will join the show at 8:35. Before I throw it to Joel, two quick PSAs. PSA number one, this Saturday, 3 hours, Pre-market prep Saturday extravaganza. Link is in the description, available to all wherever you are, U.S. or international. Again, 9 to noon. Dennis, Joel, Rob Friesen, Mitch. I'll be at a wedding. 3 hours. Link in description. Second PSA is today is not going to be a normal day on our stream. After this show ends, we have the Benzinga Reopening Stocks Summit today and tomorrow. Today we're going 9 to 5. Profiling dozens of reopening plays. So that'll be coming up next here on our channel after this show. But that being said, let's throw it to Joel, bring up Joel's charts here, and he will update us on how we are doing in the pre-market session. Good morning, Joel.
Good morning, Spencer. Tame overnight session. We're only in the red by a couple handles at 44.41. We didn't get to the intraday high from yesterday, and we came nowhere near that intraday low. So a little market digestion here after a couple red openings on Monday and Tuesday. A little bit different outcomes. Crude up 84 cents at 67.18. Just trying to get back into that 68 handles. Kind of stumbling at yesterday's high. Gold just kind of sneaks its way back up to 1,800, but can't get through. That's up a buck at 1788.80. Silver just hanging out, trying to get into the 24 handle. That's up 8 cents at 23.74. Bitcoin, just a mild pullback off the high, down 650 at 44,870. And Ethereum's going the same way. That's down $102.50 at 3021. So retail earnings, and Dennis, I guess a lesson from today is when a stock in your sector has a bad report and it gets hit, be careful what you're hitting off that report. And I'm referring to Home Depot and Lowe's. Holy macro, what a change.
I mean, Home Depot obviously gets hit on the earnings. Believe it or not, Lowe's was down more than Home Depot on Home Depot's numbers. I had multiple traders saying that this is nuts. Like Lowe's hasn't even reported yet, and they're hitting Lowe's harder on the Home Depot report. So obviously we know Home Depot, they were disappointed with the results. It got hit. Lowe's got hit really hard on the Home Depot numbers. So the bar set incredibly low for Lowe's by Home Depot. What do? Easily get over that bar. And the stock snaps back the entire losses from yesterday. So low-hanging fruit. I'm kind of mad at myself because I thought about taking it long into the report because I just thought that, they've hit it this hard. I'm like, even if they say anything remotely okay, this is going to snap back, and that's exactly what it does. But I didn't have the guts to take it into the report. I should have. Congratulations to the longs who saw that. We got Lowe's trading up 4%, up $7 in the report. Am I buying it now? No, I don't buy rips. I buy dips. The dip yesterday was to be bought. If I owned it, I would probably sell it into this rip here this morning and collect your 4% and be happy about it. But wow, I mean, the reports themselves actually weren't that much different. It's just that all expectations were high for Home Depot, and then they were extreme. After one day, they were extremely low for Lowe's, and they easily get over that bar.
Full disclosure, been a shareholder of Lowe's for quite some time. I can't remember how long.
Joel's like Warren Buffett. He has all these positions here long term that he's had for decades.
But so the numbers were similar numbers. I didn't drill into them. I was just wondering if maybe
a little bit better.
A little bit better.
Give us the numbers, Spencer.
I mean, potato, right? Semantics. They're both. Okay. The point is, they're both good. Lowe's beat on their EPS, beat on their sales, and
Home Depot did too.
Right. I know. That's what I'm saying. And the comps beat as well. I think Home Depot's comps were late, I think, if I remember. Maybe not. Also, Lowe's gave guidance for the year, sales guidance. And the sales guidance that they gave, if you compare it to pre-COVID levels, 2019, it's basically a 30% increase. So they are not just back, they are ahead of where they were pre-COVID. Which I guess...
I wonder if it's regional. Is it? I mean, they're pretty much all over the place, aren't they? Both of them, I know.
Everywhere. They're almost beside each other. The Home Depot and Lowe's. They're everywhere. It's just expectations. You take these reports and you look at each other, and they're not that much different. But everybody's expecting, oh yeah, home builders are killing it, and then they don't. Home Depot doesn't kill it. They nail the stock. And then Lowe's comes out and does okay. And they rallied all back because, they were expecting, Home Depot didn't kill it with Lowe's and probably going to miss too. And they don't. They come out and their numbers were decent and they rallied all the way back. This game is all about expectations.
It's tough.
It's all about expectations. Sometimes it's easy though. This wasn't tough. This was an easy one. And I'm really ticked off myself because I thought it. I was like, I should go along to this report. Obviously when we were talking on the show yesterday, we didn't know that Home Depot and Lowe's were going to get slammed all day. But they got hit so hard. I mean, Lowe's closed at the lows. We're saying Lowe's so many times, it's driving me nuts. But $182 got down to. The expectations were just so incredibly low for the last time.
Dennis, could you have got an index against it?
How?
I mean, Lowe's again. I mean, what do you hedge, Lowe's or Home Depot?
Well, you can't. So here's the funny thing, and we can talk about stuff like this on Saturday. When you have two peers, it's basically Home Depot and Lowe's. It's like Coke and Pepsi, Home Depot, Lowe's, Ford and General Motors. Yes, there's other automakers, but two that are very closely linked. When the one already reports, you're not going to have the sympathy move in Home Depot because you have the sympathy move in Lowe's because Lowe's is going to miss. Well, we already know Home Depot's numbers. So it's not surprising that Home Depot is not snapping back here today. It's not all of a sudden like, whoa, let's buy Home Depot because Lowe's just beat and Home Depot, oh no, they already reported. So this is where newer traders that are trading relationships and pairs get confused to a certain extent. They'll hedge themselves with a company that previously reported, and that's not going to work in an earnings play. It works to hedge yourself when the company hasn't reported because it dictates those expectations for the report. But if the company has already reported, like Home Depot, you're not going to have any expectations in there. The company's already reported with 3 months from the next quarter. So it's not like, Lowe's did really good, let's buy Home Depot. No, we already know they reported. So it's not surprising that Home Depot does not snap back here today. So you got to watch your hedges. So there was no hedge for Lowe's.
Okay.
The call was just to buy Lowe's.
That was it.
The odds were that even if they missed, the expectations were so low from yesterday that, were they going to slam it? And the odds are that they weren't going to miss, and they come out and they beat, and they just beat and beat, be on top, be on the bottom, and they snap it back. So sometimes you just got to go with the odds. The odds were that Lowe's is likely to rally on this report.
All right, I'm just going to give you some quick numbers. This is a tough one. Pre-market high is 192, so of course that's your first target. If it, my natural instinct would be, man, these people that got slammed for 2 days, boy, they're getting their money back on one report. I know what I would be doing, but 192, and I really can't give you anything above that. But for the next couple days, like if Lowe's is, they're just going to separate it themselves, they're going to diverge, and Lowe's is going to go back over 200. You're going to clear out this 194, 195 seller. That's really the major resistance that you got to keep an eye on. On the downside, I'm just going to give you support for today, and that's yesterday's high. That's a long, I guess that's not too far away, 87, 85 on the gap fills. So that's what I'm looking at. Up 844. So boom. Got to get through that pre-market high though, folks. 192.
Can we talk Target here for a second.
Target.
And I want to actually talk Target within the context of the same thing within the context of Walmart, because we had Walmart yesterday, Target this morning. Target's numbers were good. Not really a surprise there, right? Their EPS beat, their sales beat. They also announced a $15 billion buyback.
Who knocked this thing down to 242 on that report?
I don't know. There's earnings overshoots all over the place.
Okay.
But,
can I give you?
You look at Walmart. You didn't really have any indications. So people say, well, Target was down a little bit yesterday. Why didn't they not snap back on that one? Well, Walmart didn't get killed to the tune like Home Depot did yesterday. Walmart was basically flat. So you really didn't get, they were like, wishy-washy. They really couldn't figure out whether they liked the Walmart report or they didn't. So it didn't change any expectations for Target. And then Target, does get hit a little bit, but, it gets hit more here because the expectations, the Target run in the last 2 months has been nothing short of incredible too. I mean, we were 210 to 265. I know if you guys are, into growth stocks, maybe you say, a 20% move isn't much. For Target, that's a big move. It's had a huge run in this quarter. So it's not surprising that, it might give a little bit of it back. Would I be a buy the dipper on Target? Probably. Do I wish I would have bought it at 242 this morning? Obviously. But I don't know. You're in the middle of nowhere here at 250. So I could see it filling the gap. I could see it going back and retesting 242. You're kind of in the middle of nowhere. No call on it.
I want to give you a cool stat here. This is from Rahul Sharma. He's a great Twitter follow at Retail Guru. He's a former Wall Street guy who just knows the space really well. Comparing Walmart, Target, and Amazon, okay? In the second quarter, Walmart's e-commerce sales increased 9%. Target's e-commerce sales increased 10%. Amazon's e-commerce sales increased 23%, and Amazon got crushed on its report. So it just goes to show that the big get bigger, and sometimes expectations aren't aligned. But
it's just all about expectations. This market, everything is about expectations.
And the Amazon report was considered such a disappointment, and yet they are gaining market share. They're already the leader, and yet they are gaining even more market share from their two biggest competitors in the e-commerce market in the U.S. Right, Target, Walmart. So.
The biggest trouble, just before you give the numbers. Go ahead, give the numbers. I'm going to give it.
I was just going to say,
I want you to give the numbers.
250. I mean, yeah, you took it out. You went to 242. I don't know. That was an overshoot. But the stock has been comfortably holding 250 since early July. So it's a battle of 250. If it, after this incredible run, a nice, half number like that, whole number, whatever you want to call it, it's been holding up as support. It looks like it's given way here. So important for our Target today to hold this 250. Doesn't look like it's going to do it right now. If it holds 250, turns it way up, then it's still good. Below 250, I don't know. I don't know really where you can find a place to go with this thing. I do see some other daily lows, but I'm just giving 250. And then, what was the low from yesterday? 52.05 if you're looking for a gap fill. Go ahead, Dennis.
It's just this market just doesn't seem to care about, it's not about the fundamentals. It's not about, this company's cheap and this company's expensive. It's all about the narrative. It's all about the story. Mitch talks about this. I mean, this is just what carries stocks. It starts to get hot. We hear COVID stock, it starts to go, and then Moderna and Novavax start to get hot. And then we get a breaking from Norway or wherever that study was, that, there's side effects, the kidney problems with some people who are having the Moderna shot, the mRNA. So, and it's been hit since then. I mean, everything is just all about story. Story is the number one driver for everything. Bring up Regeneron. I mean, Regeneron's a cheap stock. It's been a cheap stock forever. Gilead as well. It's a cheap stock. It's been a cheap stock forever. But you're now getting driven by the COVID story. Once again, full disclosure, I am long REGN. I've been long for about a month. Why? Because I thought the COVID story with the narrative coming with Delta was going to get hot again. And that story has got hot again, obviously, with cases increasing. You look at the stock and it's challenging an all-time high here. This is, been a cheap stock for a while. It trades 11 times earnings. It's got a market cap of, I think, of 60 billion. It's, reasonably priced, very reasonably priced, but the story is getting hot. And that's why when you want to get long is, getting ahead of the story. I mean, Chris Camillo specializes. We talked dumb money. We've had him on a few times. He's very good at this, finding what stories are going to get hot. Where is money going to flow? And the stories get hot and everything blasts off. or those stocks blast off, and that's what seems to matter. So you're sitting here just crunching numbers. You know, it's fun. It's a fun exercise to crunch numbers, but in this market, it just doesn't seem to matter. So it will all matter. Fundamentals do matter. I'm not saying they don't matter, but in this tape, in this retail-driven market, which it has been a retail-driven market, it's more about story. So I don't know. I look at a stock like Regeneron. It's not surprising that the stock is moving up in this environment right now when we're seeing cases of Delta and the cocktail therapy that Regeneron has appears to help.
You know what's interesting is these vaccine stocks, they're all going one at a time, right? Moderna went to the moon and came back down. Yeah. Pfizer made a new all-time high, and then I guess it's still there. Yeah. Now you're looking at Regeneron, which isn't not a vaccine, but they've got the antibody cocktail, so it's a treatment nonetheless, right? Regeneron looks like it wants to get to a new all-time high, right? It's close. Yeah. No, wait, it's there. I'm sorry.
Well,
it's close. It's right there.
I just want to give you that number. Someone got real excited here. Took it to 670. What a nice round number that is. A little bit of some volume traded. This is not a heavily traded stock, but let's just focus on the all-time high right now, 666.64, and that's currently where you're trading. So there's your breakout. That first target 670. I've seen this thing do a lot of different things in the past, so it'd be important for like the first 15 minutes. You want to see this thing take out that 670 and keep on going. A lot of people sitting a lot of profits, and it had a really nice day yesterday. Adding, had a low of 624, closed at 647.44.
It's hard to be the buyer now. I mean, now if you're coming in, you're chasing it. You needed to get in this. We talked about this 2-3 weeks ago when I bought it. Just saying, I think that story is going to get hot. This actually, it's funny. It's been such a tough market to invest in, and I know everybody looks at S&Ps and like, all-time highs, everybody's doing good. But this is not the same SPY that it was back in January. Like, remember when I said, I did the exercise and looking at my long-term portfolio and had like 100 stocks in my long-term portfolio, and I was up in 97 of them. I was like, I'm not a genius investor. It's just the fact that everything is making new all-time highs. We are not in that market anymore. We are not in Kansas anymore because we're still at all-time highs in the S&P, and I probably got 20. I'm down because I raised a lot of cash. I'm down to maybe like 60 or 70 positions in the long-term portfolio. I bet you there's 20 of them down in now. So it is not, all roses, and it's not all, it's not like it was back in January. This market is not made up of everything making new highs. It's made up of Apple, some of the mega caps, some stocks making new highs, but a lot of stocks have been hit really hard. Regeneron is one that's helping my portfolio, but I have some other ones that haven't been helping. Obviously I put some Fisker in there. It's been terrible. Anything EV has been terrible. I mean, look at the turn in the lithium stocks too. We talked about them a few days ago. They had these ridiculous runs. LTHM, LAC, they gave it all back in 3 days. LAC breaks out, blow off top. I'm long it still, 20.75, and all the way back down to 15 in 3 days. These are some violent little sell-offs in some smaller companies.
Wait, can I just finish the vaccine thought for a second? So they're all kind of going here one at a time, right? Was my point. So you look at who hasn't really gone. Well, Dennis mentioned this the other week. We talked about this Novavax, right? Hasn't really gone. AstraZeneca haven't really gone, right? So why? I don't know. But the other ones have.
Well, I'll tell you why on AstraZeneca. It's too big of a company.
No, you said that about Pfizer, Dennis.
Pfizer,
you said that about Pfizer. We're at all-time highs.
Yeah, it's true. But also the AstraZeneca one isn't even, allowed basically in North America. So it's been the dog of the vaccines. Let's call it what it is. I mean, we were using it in Canada at one time and they got rid of it. The US never authorized it. So it's being used in Europe a lot, but the Pfizer and the Moderna have proved to be a superior vaccine, at least so far. So it's not surprising that they haven't gotten the lift off of their vaccine. I think AstraZeneca is up just because all drug stocks are up. I don't think they've got much of a lift from their vaccine at all. I mean, look at GlaxoSmithKline, GSK. That's come back a long ways. They're not riding a COVID wave.
No, and just to be clear, I understand that Novavax doesn't have an approved vaccine yet. But if they were to get it, who knows?
No, I said that. I made that argument. the approval on this thing could pop. So I made the argument to buy Novavax in the low 200s, although I still can't. I mean, it's a little bit of a crapshoot because what if they don't get approved? Does it gap down 30%? Like they say, no, we're not approving this, and then all of a sudden, I don't know.
Who knows? It could get approved and go down. I mean, the way the
I think it gets approved, I think it goes up, but I just don't think approval is a guarantee.
Right.
So, because it's not like we're hurting here now. Like, think about how it was more easily approved when we needed something. Now we have vaccines, so the bar is going to be raised a little bit for these approvals, I would think. When we had nothing approved before, obviously, even, on all these drugs, I mean, all these were not just straight up approvals, right, Spencer? Like they're
all emergency use authorization.
Emergency use only.
Yeah, they're not even
because the side effects are still, and this is why the anti-vaxxers, have a point. I mean, they're still, we've only been 6 months with these. We don't know long-term side effects. I just weighed risk reward and saying, well, we know that COVID doesn't do you very good, so I'll take my chance with some side effects. But if Novavax doesn't get approved, that thing could be $150 stock or less. So there is risk involved with that. I personally think it's going to get approved eventually, and I think there is a gap between the Moderna market cap and the Novavax market cap. But again, we've said Moderna's best of breed, it seems like, in firing on all cylinders. I'm more inclined to buy the Moderna dip, which is kind of got erased yesterday, as opposed to coming in here and taking a flyer on Novavax.
Yeah, and then someone in chat mentioned Inovio. It's just in the same camp as Novavax, Inovio, INO, right? Lower price stock, hasn't gone yet. They don't even have a vaccine, but if they were to get it, who knows? Really. I'm just finding it odd that these vaccine stocks, the ones that have vaccines, they've all ripped one at a time. For some reason, I don't know. I just find the whole thing weird. But let's go back to your point.
I just want to expand on that, though. That was a good point, too. Like, I think what you're seeing, Spencer, is the vaccines. You're at a point where, Canada, we're at a point, and obviously you can talk about a third shot. But I think it's something like 82% almost 80% are fully vaccinated now. It's a high 70s anyways. You're getting a point where the people who want to get vaccinated are vaccinated. So now it's going to be, they're going to get a few stragglers that are going to come in, but it's about the therapies now because you know what? If we're at vaccine, where people are pretty much, we're maximizing what we're going to get out of that. Now it's about, okay, if people are still going to get sick, how are we going to make these people better? And it's Regeneron, potentially Gilead, potentially the therapy drugs that are lagging for that reason, but now they're coming on because we already went the vaccine route. Now we're going to have to go the therapy route because you know what? People inevitably, or some people are going to get sick and they're going to need help. And it seems like the Regeneron drug helps that. So I think that's why you saw Regeneron and Gilead lag to a certain extent. Although the Gilead drug, I'm not sure if they've got that improved or not, but there's still, the jury's out on whether that one helps or not. But it appears the Regeneron does. So I think that's why they didn't move off the bat, but they're moving now.
Yeah.
Just real quickly for Moderna out there, nice rebound yesterday. We talked about the 350, actually went to 349. You're clearing a pair of highs right here at 406.30. Important to hold that, but it kind of looks like maybe you want to get half of this move back. I just figured it out. It comes really closer to 423. If you're looking for, the rebound on the bounce, not necessarily have an expectation for it to go back up to 497, 500. So area of interest, if we can hold that double top from last Wednesday, what was that? Today's Wednesday, last Thursday and Friday. I look for a 423, 424 target, short-term target, Moderna.
And to Dennis's point before I brought it back to the vaccines, he was going on to talk about the small caps and the Russell. And the point that I made before we came on was I never used to look at the Russell components every single day, so I don't know if this is always the case, but it does seem like every day now when I look at it, there are always 3, 4, 5 stocks down, 20, 25%. Again, I don't know if that is normal because I never looked at the Russell every day prior to like the last few months, or at least the individual components of the Russell every day. So I don't know. Maybe that is normal. But it just, if it's not normal, then that's a new thing that's happening. But maybe it is. If someone in the chat, maybe you can correct me.
I think there's some stocks that are always going down, but it is a lot of stocks going down as of late. You know, somebody in the chat was saying they were down on, 2 days ago, and the SPY was up. They were down in 21 out of the 24 stocks.
Oh, sure.
You know what? It's the IWM is such a better indicator for the overall market here right now. Even when I'm hedging now, I've been using IWM a little bit more than using SPY, because it seems like I'm just, if Apple and Amazon or Google, Facebook are up, SPY's holding on. And then you've got other stocks that are down 1%, but here you got SPY down 0.1%. Today's a weird day because you have a lot of stocks actually bouncing a little bit today, and IWM is actually flat. But the last 3 days, like look at the difference. Even we've talked about this, but look at the difference in the last month between IWM and SPY. S&Ps are right up at the highs. We're knocking on the door of all-time highs here once again. You've got the Qs not too far off, and then you have IWM that's significantly off. That's a better tell for the overall market. The overall market has not been that nice in the last month and a half.
Here, I'll bring up my screen that I just put up all three charts at the same time, and let's just zoom out.
Oh, nice.
Let's just zoom
That
out.
was good.
Let's just zoom out. This is all right. Here we go. This is since April, right? We'll just go. We'll pick an arbitrary time, whatever.
There you go.
Since April. There you go.
IWM is down, or is that minus? Is that a minus, or it's up? 2%?
No, it's up 2%.
Yeah, but Qs are up 17%, and SPY's up 14%. Thank you, mega caps. Thank you, mega cap tech. Q's telling you that. Mega cap tech has been leading the way. I know Amazon has not been one of those, but Microsoft, Apple, Facebook is right up there. Google is right up there. That's been what's been holding up the overall market. The real story here since April is your average stock is basically not up at all.
Right. Hey, real fast, can I bring on a quick special guest, surprise guest, sitting right next to me?
Yeah.
Everyone say hi to the Brentster.
Holy cow. Brent, what's up?
What's up, guys?
What's
Holy
going
mackerel,
on, man?
time.
Not much. I'm in office today. I'm going to be emceeing the reopening summit, getting kicked off in a half hour here.
Yeah. I was snooping around on Saturday. I was downtown, and I came into the office, and I looked at the Brentster wall there of computers. Did you have to fire those things up?
It's sad over there. It's just disheveledness. There's just a disarray of things.
Very sad.
It's great to see you, man. Have fun. We'll have to catch up here soon. I gotta come and see the new dog.
Do you got any teases, like a stock or anything? Like for
I mean, like for the
your
execs that are going to be, yeah. I mean, it's a ton of real estate companies. Obviously,
a lot of REITs.
Certainly impacted. So I'm going to be interested to see how they're having to change their models, how they're having to try to innovate. There's like 5 or 6 REITs today. And do you got any REITs tomorrow, Spence?
I got some REITs. I'm emceeing tomorrow. I got some REITs tomorrow as well.
Spence or Brent, what's your shirt say?
Oh man, this is the look. It's at the corner of Wall Street and Woodward, Benzinga. Woodward, we got Woodward right here. Spence looking out on Woodward. Get it? Corner of Woodward. And
Where's my shirt?
Joel, if you came into the office, you could get some. We have some.
Where are they? Where are the boxes? I could have ruffled through the boxes
over there.
You got any extra? Man, if I would have known that.
Got any extra larges?
You know me.
I was listening to you guys earlier. You guys had a nice little discussion. Dennis, I liked your points on the expectations for some of those sympathy moves, like Home Depot and Lowe's, and the one that you didn't mention that I wanted to ask you about is the good old toy trade, Mattel and Hasbro.
Those are two that I trade and pair together a lot. And obviously over the years, Hasbro has definitely eaten Mattel's lunch.
Star Wars.
But in the last little while, Mattel has held on pretty well. When are they due to report? When's Hasbro and Mattel?
Did they already report? Hit the calendar.
Did they report?
I'm pretty sure they already reported.
They get lost in the, when we get in those 250 earnings days.
Yeah, they're already out.
Right.
Yeah.
Hey, Brentster, before we let you go, I know you got some 8:30 numbers. I just wanted, and I know I always bring this up, and it's boring, but we were just talking so much COVID and so much Delta variant and everything, and I'll never forget. In like second week of February, Brent pulled me over and he goes, "Man, the news flow is different." He's like, this is getting super serious. And we've been talking about it earlier. And I believe that was my last day in the office. That was like
I freaked Joel out good.
he pulled me over and he's like, man, this news. So how is the news flow with this? I gotta, like, Dennis and Spencer are going back and forth and talking about all the drug stocks and everything. And, you hear all these things. Like, what do you see all the news from everyone all over the world. You see these companies. I mean, where are you at on it now? Are you
I think
concern level?
And Joel, I think about these things in the context of a discussion you guys would have. So like I've been, anxious to find a day to pop on and talk to you guys about it a little bit. I think that what's happening right now is I think it's one of the first times in the last year and a half where, and not right now, but over the last like month or two, the difference there's a discrepancy in what like Main Street expectations are, and people are starting to get worried about Delta or have been worried about Delta and starting to get a little offended by mask mandates and stuff like that. And from a market perspective, when I'm talking with friends about this, I'm like, yeah, there's normal people, non-investors that are thinking about this, but in my opinion, the market never expected us to be fully reopened right now. Never expected us to, there was always the booster. The booster was always the thing. If we didn't know what was going to be the result, if we needed a booster or not, I think that the market wasn't able to price it in. So, that's why I think the Delta variant hasn't really had the same impact that it's having on Main Street, because I think investors never expected, something different than what's happening right now, unfortunately.
Maybe.
Yeah.
Brent Slava will be emceeing the reopening conference, day one of the reopening conference today. Coming up next, Brent.
Woo!
Great to see you, man.
Yeah, thanks for the invite, Spence.
Go back on over there and get set up, and
Cool.
then we'll see you in a little bit.
Later, everybody.
See you, Brent.
Right, see, I knew you guys would like that.
Yeah, no, it's great to see the Brentster.
Great to see the Brent there. Brent is the head of our news desk, guys. Just so FYI, if you don't know Brent, he's the head of the Benzinga news desk. Been here longer than me. And longer than most people, I would say. Okay.
He's actually been here longer than me and Joel.
I think it's been longer than you and Joel, actually.
Yeah, when did we come in here?
No, he came in just after.
I think Brentster was before me.
No, he wasn't, Dennis.
You don't think
It
so?
was
Hold on.
PreMarket. I mean, it was called PreMarket Info back then. When did PreMarket Info start? 2012 or 2013?
2013. I think.
2013. I joined on October 26th, 2012. It was. I remember that
we were there at 12. We were there.
thing.
We were doing the show.
We were talking with Jason.
You guys were doing the show like on your own thing.
We were doing
right?
it on our own then.
Yeah.
Don't talk
Those
about
were the days. Those
That
were
was
the
bad
days.
when we originally started the show.
Don't
We
talk
didn't know what
about
we
the
were how to talk.
technology.
Hey,
We didn't do anything
if
right.
anybody wants a good for PreMarket Prep fans
Oh, no.
specifically, go back in Benzinga's YouTube on the YouTube channel. You can sort.
Actually,
you can sort by.
No,
oh, really? Did
well, I made the playlist private.
Oh, Spence. There's like some old. This is recent, Spence. I did it like a few months ago. I went back and I watched a PreMarket Info show from like 2013,
Oh,
and it was rough, but it was good. It was
It's
honestly
informational,
fun.
but it's not smooth.
You guys are more refined now. Let's just say.
We've come a long way from Southfield to Detroit. We've
We
come
still
a
have a
long
long
way.
ways to
Yeah.
go.
All right, gentlemen.
All right.
Take care.
Thanks a lot, Brent.
Later.
Gil
Yeah,
Morales.
If you want to go back in the archives, you can do that. Thanks a lot, Brent. 8:34. There's a lot we didn't get to today, but I want to bring Gil on here, so let's do it. Gil Morales is the author of the Gilmo Report, runs virtueofselfishinvesting.com. Gil, bright and early. Good morning.
Morning. How you guys doing?
Thanks for joining us today. How you doing?
I'm doing great. How are you doing?
We're doing good, I think.
Good.
all
You
things
sound
considered.
like you are. I mean, you're all having a good time over there.
Well, we try, right? I
I
mean,
was thinking somebody said it's been a long trip or something like that, and I'm reminded of the Grateful Dead song. The way this market has been since last March, it's like what a long, strange trip it's been. So whatever happened to Sweet Jane? Anyways, or
What
she's
is your
now
thoughts
she's now
since
Arc
March?
Lady.
We were
What's
just doing
that?
an exercise right before you came on, comparing the S&P and the Qs to the IWM. IWM is essentially flat over the last 5 months, and you got the Qs are up 18%, and SPY's up 16%. We know what's held that up. It's mega cap tech.
Right. Right.
What are your thoughts here? I mean, is there a catch-up trade? Are the small caps oversold? How are you approaching this market?
Well, I've been treating it mostly as a tactical type of market where I'm swing trading long and short depending on what the setups are, but they tend to be contrarian. And I think I was with Joel on his show in the afternoon on July 13th. And if you look at a chart of the Qs, I don't know if you guys can bring up my screen if you want to.
Sure.
Yeah, go ahead and share it on the bottom.
Let's see
There.
if I can.
Let's see.
How do I do that?
There's
share?
that big share screen button. Yeah.
Okay,
Yeah.
share screen. All right. So
Make sure you share the right one there, Gil.
Don't show us your account number.
Take my porno page off. Is that what you're saying?
Actually, or do show us your account number.
All right, here we go. Let's see. Boom, boom. Let's see. There we go. All right. So here you have the Qs. And I was on with Spence on the 13th, which would have been right here.
Wait, not seeing it. Not seeing it.
Uh-oh, you're not seeing my
Hit share
screen?
screen, then you got to probably pick the screen.
You got to like select
All right,
your
hang on. Let me get back there.
Gonna click like OK or whatever. Yeah.
We're excited.
Share
Drum
audio. Do I share the audio? No.
No, you don't. You don't have. You just pick the screen of the window and then you select it. Then you click share and then.
Let's do. I'll share the entire screen. So okay, I clicked on that, and now what do I do?
You click share. There's like a blue button on the bottom, right? Like in that.
I'm just gonna go.
Window.
Let's go here. How's this?
In the pop-up window, there's like a blue button. There you go.
That? All right. So you're looking at my charts there. There's my quote screen.
What do we got?
So
yeah.
You can see all my short positions on the left side there.
Okay.
Anyways, on the 13th, that would have been right here. So if I use my little pen over here, that's the 13th right there. And as I told Spence at the time, I was going short, and I went short. And you broke down over the next several trading days until you hit the 19th, which was that Monday where you saw the Dow down 900 points, right? And so what I was seeing at that time, you guys still there?
Yeah,
we're here.
with
Yeah,
you.
we're here. We got you.
I never know with my technology. I got this old headset I'm wearing, it's like the size of my head. In any case, so you broke down. And if you look around, if I look at some of these stocks, you can see, you look at something I was short at that time was Western Digital. And you can see what happened here is you broke hard from the 14th here down into that Monday. And then once you got down in here, you're undercutting this low down over here on the left side. And once you catch that, now I'm covering, okay? And you saw that across the board. And I mean, I'm talking about like everything that I was working on the short side. Look at Snap. Snap broke down, and I was getting short, actually short off the peak here because you have a failed breakout. So you can see here, this is how breakouts work in this market. They break it out, it noodles around, and then bam, they whack it. So I'm getting short here on the day I'm talking to Spence. So it breaks down, and you come down for 3, 4, 5 days, and then you get that climactic low. So if everybody was thinking about getting short on that Monday when the Dow was down 900, from my perspective, based on the stocks that I'm looking at, I'm looking to cover, okay? So that's not the point where you're getting short. The time to get short was right when I told Spence I was getting short, because I am such a genius. But in any case, you have it come down. And what I see on that day, that was Monday, and Tuesday, every single stock in the market is pulling at what I call an undercut and rally, where it undercuts a prior low like that, and it turns back through that low. And so what I do is flip long, and boom, there you go. I didn't hold this through earnings, but you got a viable gap up. But what is that? That's a big gap up breakout. Where's it gone? Well, it's gone nowhere. So what happens is you have a breakout attempt. What's that? 6 days ago, last week, it reverses, busts a 10-day line. Now we're headed back below the 20-day line. So it looks to me from a stock perspective, I just go with that. What are the stocks telling me? And they've been telling me to be short. And, I can pretty much go across the board here with some of these. You look at AMAT over here. And of course, what you have here, again, look at the same thing. This is this was the 13 somewhere in here. I can't see my dates up here. Hold on a second. Pull this guy up a little bit. There we go. And you can see the 13th was, there's a 13th and the 14th. It reverses here. You break hard, and you undercut these lows in here, and boom, you're right back to the upside. Now this tries to break out. It noodles sideways for a while, and then you start to break down last week, and then bam, you're back at the lows. And you're seeing that pretty much across the board in so many stocks. You can see stocks that are trying to break out. You look at something like Roku. This has been another good short, but what is it? It's a double top. You can see the two tops here, the one on the left, the one on the right. Yeah. And of course, the one on the right is a big volume breakout. You got a big volume spike there. Let me get a thinner pen here. And then you break down, so you trigger as a short along the 10 and the 20-day line. Now you're down here at the 200-day line. maybe in a cover point, but we'll see how this goes. I mean, at this point, I use the 200-day line as a trailing stop on it at that point. So, that's really what's going on in this market. And right now, I see a lot of other stocks that could start breaking down. I've been watching some of these clouds because something you'll see in this market is you'll see a group rise up off the lows. So back in May, we saw these clouds, and I could probably use this Sky ETF, which is a cloud ETF. You can see they all bottomed in May. That would be right here. And you had a lot of patterns that were undercutting rallies, kind of like this ETF at the time. And then they all charged back up to the highs, and they've been going sideways since then. When that happened, at the exact same time, so hold this point right here, mid-May, in your eye there, and you'll see that at that point, that was when some of these metals that were leading started to roll over, what I refer to as the stuff stocks. So those would have been fertilizer. So you're going to see in mid-May here, well, this is a little late on the top, but it didn't come down as much, but you see some of these other ones doing that. This one topped out in mid-May. So just as these are topping out and rolling over, you're seeing the cloud names, which had been beaten up, turning off the lows and heading higher. So what happens is you have this sort of rotational bifurcation where you'll have one group of stocks that was leading will roll over just as they start sucking everybody in on their relative strength and they're breaking out and all that. Just as they do that, they roll over. And then another group that's been beaten down. So in this case, the cloud software names and even some of the techs like Apple came up off the lows at that time. They start to lead again. And yet the net result is that the indexes continue to melt higher, but overall stocks remain this sort of schizophrenic situation where you have, on the same day I can be long and short something or long something and short something, and things are all working. And that's basically what it's all about. You got to pick the right stocks. You got to be in the right stocks at the right time. And you have to understand the character of this market rather than thinking, oh yeah, we're making new highs in the indexes, so it must be a roaring bull market, but it's not. So that's basically what you're dealing with.
So let's look right and instead of left here. And, you had a situation where we broke down, we tested the last week's low. And one thing about this market, we've just been churning higher. We're holding the weekly lows, making new all-time highs on Friday. We did have two big down openings. One day,
Monday and Friday.
Yes. And yesterday.
And yesterday we didn't come back really.
No, we didn't. We didn't. So this is, we're in the malaise of August here. I mean, I have, my level for the S&P where I think we're going to be a little bit more meaningful correction. And that was right. It matched last week's low. So this is the 44.12 area. We're still 26 handles comfortably above that. What are, for a turn, for a big move to the downside? I'm not concerned about the upside. What would be an indicator to you? SPY or IWM or QQQs?
I would say you're making a mistake of paying attention to the indexes. I don't watch the indexes. So, if you look at the SPY, okay, if I was going to treat this on a purely technical basis, so forget about whatever is going on with individual stocks and let's just look at the indexes. You made a false high on Monday, right? Okay. Volume looked good. Yesterday, you found support at the 20-day line. That green line I show is a 20-day exponential moving average. So you are holding support on the indexes. So, over on Virtue of Selfish Investing, which is the other website I do with my colleague, Dr. Chris Katcher, who's a fellow former O'Neill portfolio manager, his market direction model, which is solely based on the indexes, is still on a buy signal. And I think if you're going to play this market long, the most consistent way to do it based on the trends that I'm seeing, and you can see this steady trend here in the SPY, is to just play it with ETFs. So if you're just playing it with ETFs, then yeah, you're right. It's a bull market. It's an uptrend. If we start to see this break the 20-day line, then you're probably going into a short-term correction. But the one thing you're going to notice very quickly here is that the 50-day line in the S&P is consistent support. So, if we reach a point where we actually break that, then maybe you're in a full-on correction. But by the time that happens, I'd already be well short for several days, I would hope. And the stocks that I'm short are busting pretty nicely. So, by that point, I think it would be pretty obvious. But that would be the major thing to look for, I think, if you're asking, since you're asking. in terms of a big technical breakdown.
Wait, Gil just said the magic words. He said, if you're playing this market with ETFs, it's a bull market. Yeah, baby. It's I'm talking.
It is.
That's why I love ETFs.
So the
Yeah,
most
and,
consistent is SPY. It doesn't go
Yeah, you
down.
got it. And then you can throw in, what do we got? What else do we have? We have, let's look at the Qs over here. The Qs are losing a little momentum. And, they've been flat here, but they're holding up. But it's still in an uptrend. It doesn't even really break the 20-day line. The last correction we had when the SPY hit the 50-day, this thing just hit the 20-day, and it held up pretty well. So, yeah, and so my colleague, Chris Ketcher's having a good time with his market direction model, just playing the ETFs. But I would argue that you make a lot more money if you pick the right stocks at the right time. One of my favorites over the last couple of months.
You probably do. It's just
you definitely
it's
do.
just a lot harder.
But the flip side is you can lose more money too if you're wrong. So
yes, that's it. That's the flip side.
Like this
Can you drop us like a ticker or two that's on your radar here today?
Today?
That you're watching close. Yeah.
Yeah, that's like asking me which car won the Indy 500 after the race. But yeah, I mean, things I'm watching. I noticed you guys talking about Home Depot. So, and that gap down after earnings. So I don't know who it was saying they bought it off the. I mean, if you bought this off the lows, okay, great, you're up 1.25%. Okay, so but to me it looks like it might just turn into a short along the 50-day line. But we'll have to see because you could come up and fill the gap. So that might work as a long trade. But I agree with Dennis 100%. You don't want to buy strength. You want to buy weakness if that's what you're looking to do. Great example of that is this is one on my radar is Square. And this is also, I'm going to shrink this a little bit. You can also see the double top type of setup here. So you have top here and you get a breakout here and the volume's pretty good. So if you're a Can Slim IBD type investor, which personally I think that's a fool's game these days, you're buying it here, and I'm shorting it there. And once it breaks the 10-day line, it's a short. Now you're breaking the 20-day line here. It held below the line yesterday, and it may be in a shortable position. Or if it flips back above the 20-day line, it could flip back to a long. And I'm completely open to either outcome. Sometimes I may be testing the stock both ways on the same day before it finally resolves one way or the other. But this is one on my radar right now. Another one to look at, Avalara. This is a infinite PE cloud stock. And again, you're going to notice it's a double top. And you run into the high here at 180 and you roll back from there. So, sometimes if I see something doing this, I will watch it intraday and I use my 5-minute 620 chart. That's not that one, but this one here. I just call it 620.
I got it.
Oh,
you got it again? Okay.
Yeah,
so that's my chart. I'll use this 5-minute chart to time entries. But sometimes I will, try to pick them off along the peak. But once you break the 10-day line in here, I'll start to short it. And you're running into resistance along the 10-day line. So this may turn out to break down. It may break down from here. I'm noticing the futures heading lower. You can see them over here. NASDAQ down 1750. I'm actually long the UVXY for the last few days on the turn off the lows. So that's working out pretty well so far. And you only, and what I do, if I'm long some things overnight, I get pretty paranoid. We're in an environment where news can hit out of the blue and there's so many hot spots around the globe. There's all the baloney with the COVID all the time, 24/7. And with all that, I always keep a little bit of this as a hedge overnight because it's like Brill Cream. Anybody remember Brill Cream, the old Brill Cream commercials?
You're dating yourself on this one, Gil.
I know I am, but you go back and look on YouTube and you can find it. Brill Cream, BRYLCREEM. My mom used to put it in my hair every day when I went to school, and it made my hair, all stick together. So it was a little hair cream, and they used to say a little dab will do ya. My mom used to put in a whole handful of it, but
Dennis, you should check this out, buddy.
So, anyways, so that's all you need if you're going to hit.
That's an old one.
That's
Gil, selective perception on my part.
I turned 62 this month, so cut me a break.
Oh, you're still young.
Gil, I feel like I'm
just
12.
Question for you. Just, obviously you go long short. I go long short too. I'm typically hedged.
You're a trader. You like me.
I like being long short. What I've found though in the last 2-3 months is it seems way easier on the short side. Way more than it was. Back in January, I'm always long short. And it's like I'm getting challenged on the short side. And then now it seems like every time we pop at something, it's just another selling opportunity. And if you're selling the rips, it seems like you're rewarded very quickly. Where if you're buying the dips, sometimes those dips continue to dip. but it doesn't seem
That's
like
true,
there's
yeah.
follow through, and I don't know
Yeah,
why, but
I would agree with you 100% there.
yeah,
Gil.
it just seems like it's a
I mean,
lot easier. Like
you know,
even
look
when they
at
mentioned
this.
something on CNBC, it was always like, oh, they're back in January, they'd mention a stock and the stock would pop up because somebody likes it on
Yeah.
CNBC and it would pop up, and sometimes it'd have some follow through. There's like
Yeah.
no follow through to any of those moves,
No.
you know, from just public commentary.
Yeah, and they're
as
big
well.
volume moves, you know, and traditionally, historically, you know, volume is rocket fuel for further upside. In this market, it's more of a contrarian reversal point. Look at what 3D did after earnings. Boom, you know, it's a double top. Hey, look at there's that pattern again. Amazing how that works, right? Disney, when they came out with earnings last Friday? Yeah, they, you know, double
Yeah.
top. You see the double
Unbelievable.
top. It's
The
almost
easiest
too
money on the
easy.
short
Yeah,
side.
it's too easy. Yeah. So, you know, so you wonder, is that telling us something about the market now? But this market's so screwy. My belief, and I can't prove it because I don't know for sure, you know, who's making the trades. It seems to me like it's all machines, and that traditional institutional accumulation by mutual funds, by hedge funds, has diminished somewhat. And there is some data to support that. You can go back on YouTube and look at a presentation I made at the Pacific Northwest Trading Conference or whatever it is. But I posted on my Twitter page before, and I talk about that. So, you know, that's basically how this market's working right now, and we'll see how this plays out.
All right. Gil Morales is the author of the Gilmo Report. His website is the virtueofselfishinvesting.com, and he is always a pleasure to talk to. He's a great follow on Twitter as well, at Gilmo Report. Gil, I often feel like you're yelling at somebody, but I can never quite figure out who you're yelling at on your Twitter account. Maybe it's
All the people he's following.
I'm yelling. I don't follow anybody.
I know.
Yeah.
I'm almost up to 13,000 followers now, which is kind of making me nervous.
Who are you yelling at, Gil? Please.
I yell at myself all day long. So
So do
that's what my
I.
wife asks me. It's like, who are you yelling at? It's like, oh, I'm just yelling at myself. Don't worry. So,
all right. Thanks a lot, Gil.
all right. Take care, you guys.
Great. Thanks, Gil. Thanks for getting up early for us.
He's a funny guy.
Gil knows a lot. I
Yeah.
mean, you learn from Gil Morales. There's, you know, a lot of people out there that think they know everything. Gil actually does know a lot. So he's a good person to follow if you don't follow him. And, you know, he just like he's got a good feel for it too. I mean, he's following his systems, but you know, this contrarian market that we've been in and selling the rips like that Disney, that's, you know, think about where we were, where the media was when Disney was 187 after the earnings report.
Oh.
They're all talking it up. Yeah, you know, Disney, rah, rah, rah. CNBC, they were talking about it all day, talking it up. What happens? 3 days later, it gives it all back. And, you know, if you're just chasing these rips, if you're buying the stock when it's moving up 4 or 5%, in this market, you're absolutely doing it backwards. Can't be chasing in this market. And I would say, you know, I know people think shorting is evil. Obviously, you know, we're traders and we go both ways. This has been the easier trade as of late. You get these pops on earnings and it's like, we're just gonna, you know, it's gonna fade again. You know, is low is gonna be one of those stories? I don't know. But you know, am I buying it up $7-8? No, because it's been really tough making money, you know, when a 4% move to get another 4% move. It's been tough. You know, certain stocks, sure, but we got to, as traders, we just got to play what, you know, the averages and what's working. And what's working has been fading the rips, selling the rips.
Spencer and I, we talked about Disney before the report, and you know, the reason I was hesitant going in the report, I'm like, what if these, you know, subscriber numbers ever dip? And it, you know, and I was cautious on the stock. It turned out I was totally wrong. The numbers were okay, right? And they were good, and they popped the stock. But look what happened to it. So your analysis, you can have whatever your analysis want, but let the price action dictate your next move. And just when Gil, because I've taken, you know, I follow what he says very closely, and he talks about institutional accumulation. That's when they're bloating up at a level. To me, which it kind of feels like, is you have some institutional distribution. They're getting out of stuff. I mean, look at that 185 level in Disney. You 1, 2, 3, 4, 5 days in a row, and then poof, you go from 178 back to that area. Those are guys just reload, and I see that in other stocks too. Even before Home Depot fell off the cliff. You see, 3, 4, let's call it 6 highs above 335. So, and you're not seeing that I'm not seeing that pattern so much on the downside. So that makes me a little bit more cautious here long term in the market.
It's been a tough market. It's the tail, you think, and like Gil was saying, you think with the S&Ps, 0.5% off all-time highs here, that everything's just ripping and roaring, and it just hasn't been the case. The IWN tells such a more story. It's a stock picker's market. So yes, some stocks come up, but growth has not done well. Think about Kathy Wood. Some people think she's one of the best money managers in the world. Obviously we don't know if we think that on this show, but 151. So since February, her fund 159 down to 115. She's down, what is it, 20%? She's down 20% in the last 6 months.
Which one are you looking at?
Kathy, ARKK.
I use them. ARKK.
Oh,
I mean,
they're all
obviously,
the same.
a lot
They're
of
all
people
the
hold
same.
her in very high regard. It's been a difficult market.
You know what this is?
And go ahead.
I'm going to date myself here.
Go ahead.
This is, and let's see if you guys can figure it out. It's a Morris the Cat market.
What?
Oh, man, I have heard of Morris the Cat, but I've never seen.
You're
Morris
going off the board here, Joel.
Come on,
He's back
guys.
to the 1930s.
No, come on,
way
someone
off
help
board
When
me.
he was a young buck running around.
I bet you
watching
within
Morris the
5
Cat.
seconds, someone in the chat, I hope they don't Google it. Come on. Morris the Cat.
What did
Famous
Morris the Cat do?
commercials.
Tell us about Morris the Cat. 'Cause I
Very
have no idea.
finicky. Very finicky.
Very finicky. He's a
Yep.
finicky cat.
Did he hang out with like Leave It to Beaver and those guys? Is that what?
No, he was after that. It was a great commercial.
Okay, a few people get it. A few people got you.
I got it. Okay, let's do
It's
some
a
more.
finicky
wait,
market.
hold on.
It's a good word for it. And
Yeah, it is.
And you know what? The fade trades have been working. It's not just selling the rip. The buy the dip on a certain extent has been working too if you're in the right stocks. But then you get stocks like this real. Maybe we should talk this one. This stock has been down. Just death by 1,000 cuts if you bought it a month ago at 22. It's like, oh, it's down 50 cents. Oh, it's
Which
down
one?
50 cents.
REAL.
Yeah. Look at this. Like, just think about, if you were, believer in, a lot of these growth stocks coming back and, that you bought this thing back at, say, $20 or $22 in June. It's just been a slow death by 1,000 cuts. There's not a huge, there was one drop there. It must have been earnings or something. But I mean, it's down 50 cents. It's down 50 cents. And you look at it 3 weeks later, it's like, holy cow, I'm down like 25% in that. How am I down 25% in that? I mean, it's such a tricky market because here you are, okay, well, I'm going to buy the dip on this real. It's going to come back. Well, 20, 19, 18, 17, 16. It has not paid to buy the dip. Is today the dip to buy? Like now it's starting to rip up because Karen Feinerman on CNBC, you're getting a CNBC pop on this. Karen Feinerman last night said she bought some more real, averaging down on her position. And that's why it's trading up here this morning. But we know some of these CNBC pops have been absolute fades. But the thing's massively oversold. I mean, it's been cut in half in a month. So you look at a stock like this and you think, is there a potential for, a rebound? Sure. But, it's not just that stock. I mean, look at, RIDE, RIDE, from $12 a month and a half ago to $5. And you think, oh, it's due for a pop. But the problem is the pop now is like, oh, it goes to 6. It's not going back to 10 or 12. All these EV plays are similar stories, a lot of them anyways. I mean, there's just a lot of ugliness in this. Buying electric LEV, $20,
yeah,
$12.
They all look bad. I just want to we're learning a lot about our chat here. Lord Jam says Morris the Cat was the Thurston Howell III of cats. I want you to know, Lord Jam, I understand that reference. But we are learning a lot about our chat today, I think, and our age demographic. But it is 8:59, guys. We got to wrap it up. Any final thoughts before we end the show today and move on over to the reopening stock summit? Final thoughts.
I'm not chasing anything. So don't chase. Wait for the stock price to come to you. If you've got a stock you like, wait for a dip. It seems to always get another chance. Just like Moderna, 2 weeks ago, was everybody's talking. It went from 350 to 450. What's it do? Comes all the way back in, gives you another chance. So, I mean, this market, if you think you missed the train, it always seems like it's stopping at the next station for you and you get another chance. So it does not pay to chase in this market. Back last year, a year ago, it was paying to chase. It does not pay to chase now. And typically in trading, it never pays to chase. We were just in such a rip-roaring rally a year ago that everything was working. And now it's not the case. So now you got to be more selective. You got to pick your points. I love Gil Morales, the undercut and rally, where, you take out a little support, you stop a few people out, and then it turns around and starts going the other way. Oversold tends to, is more inclined to be bought as opposed to, the strong getting stronger and the weak getting weaker, which we saw happen for a number of years. It's now just chop chop, slop, finicky, whatever you want to call it, but it's not the market to chase in.
All right, I'm wrapping it up, everyone.
Okay, I'm going to hop
tune in
over
to
to PreMarket Plus and
Yes,
cover all these symbols.
PreMarketPrep.com. We missed a lot of symbols today. I'm sorry. NVIDIA reports tonight. Robinhood reports tonight. Joel, Dennis, see you guys later. No at the close show. FYI, we are doing the reopening summit. It's going until 5 o'clock today. That's a wrap. Smash the like. Let's get to 500 likes. Going to end the stream. Reopening stock summit is live now. See you there.